Hello, everyone, and thank you all for being here with me. So, the future of fintech and banking. I suppose an interesting way to start is with banks increasingly wanting to be more innovative and fintechs increasingly reaching significant scale. Is the real differentiator going to be culture as we move forward? Mike, I know you've got a lot of thoughts on this point.
Well, I think one way to pose the question is a battle between culture and features. And the question is for consumers or even small businesses, what drives your usage choice? Banks with, or big institutions, because often we say banks, but card companies may be just as big and just as large, with massive amounts of resources, can throw lots of features at the consumer and make that very attractive. But if you look at, in the consumer money transfer space, there's TransferWise, there's other firms out here, which just have a very different culture. And that culture is appealing to consumers and businesses. And so rather than looking at this as a war or a battle or an evolution between big companies and small companies, it may be between different kinds of cultures. And in that kind of culture war, I think that large financial institutions, because they have the word institution, will inevitably lose.
Claire, what are your thoughts on that, representing the big banks?
I think ways of working is definitely a huge part of our next 3 years transformation. So at the moment, we are running leadership program. How do you embed, the new ways of working? How do you reskill people in, the new roles that are coming more from the startup environment? So we talk about product owner, scrum master, system thinking, service designer, that really help you to think differently about the problems we have at the moment. So rather than having, projects and rather than having project and set time, we're really thinking about what are we trying to solve, implementing, OKRs, for example, in order for, us to have better outcomes as opposed to activities. So I think, that's really a key points of our transformation. So for me, culture is a huge part of the new battleground. I would say speed and agility is probably another one as well.
And Reetika, bring some of the Silicon Valley perspective to this. How important is culture and also, as Claire said, their speed for both banks and fintechs who are sort of snapping at their heels?
Yeah, I think I might say something a little controversial, and I actually,
please.
I don't think banks are particularly innovative. At Silicon Valley Bank, we don't consider ourselves particularly innovative. We consider the clients that we work with the innovators, and so we are constantly thinking about what's a platform to give them in order to innovate and learn from the innovation and try to embrace as much of it as we can. And when we are we spend a lot of time looking at features, like Mike was talking about, how do we create features, and then there's the innovation that's happening as well, but I just, as another bank, I'd love to get what your perspective is on that, but I don't think that banks have it in us to be on our own truly innovative, because we have so much legacy infrastructure that we have to deal with, right? I think we were chatting a little bit about this in the back end, in the back room, is just our back ends are these really, really old systems that we're trying to patch together in order to make sure that we can deliver unique experiences where, startups don't have to deal with that.
So you're more about facilitating the innovators rather than trying to be innovative yourself.
Yeah, we with a name like Silicon Valley Bank, we also try to be innovative, but the true disruption isn't going to come from us.
So just to follow up on what Reetika said, I've probably been flogging systems to banks for a long time, and I think systems that we sold, certainly in COBOL, and maybe even before that, are still running at the core of many major banks, and they'll have 300 or 400 interfaces. And I'm not sure if we want that bank to be that innovative. I'm sort of happy for them to be stable, and that for the community of smaller, innovative companies that I come from to be able to think around that. I thought the question the moderator posed was quite interesting, is, in the way she put it, she made it feel like it was a winner-take-all market, that somehow or other up from the ashes will rise some fintechs and there'll be multi-billion-dollar companies and JP Morgan will disappear. And that might not be what my image of the future is, but I don't think we need to expect banks to be too innovative. They'll do what they can, and that's enough. But it's a massive marketplace, and there's room for a lot else in there.
And Claire, I mean, do you feel, sort of speaking for Lloyds, do you feel like you have to be more innovative now when you've got people like Monzo, N26, all these sort of challenger brands in the consumer market?
So if you look at Lloyds Banking Group, it's one of it's the biggest bank in the UK in domestic market around retail and commercial. We have 13 million of our customers that are banking online, which is more than half of them. We have about 9 million in mobile, and around 70% of our customer needs are met online. So I often say, like a bit back to the point of Mike, but when people ask me, what's the biggest innovations that have happened in banking around the last decade, I often say actually it's mobile banking. Like when I joined the bank about 7 years ago, mobile banking was very embryonic and the usage was much more lower. And now people, use their mobile bank all the time. And I think that go back to your question around Monzo and N26 and the customer expectation. And we were just discussing about that, during the prep of this panel. Does customer really have the same expectation when they are using a Monzo and an N26 and when they use a Lloyds Banking Group app? Is it exactly the same as they expect, or actually do they want their bank to be their bank, and do they understand, there is a transition and a differentiation? I think that's what, there is no answer about this question at the minute, but I think that's what we will see in the coming years.
And do we think as well there's going to be more collaboration between fintechs and banks? I mean, Reetika, you talked about being the platform there.
Yeah.
Is that the future where banks actually work with the fintechs to provide more of these more whizzy features while they are the stable platform?
Yeah, I mean, I think that's been sort of the guiding philosophy for SVB for years, right? And how do we make our infrastructure available to startups to allow them to sort of drive innovation and push new ideas forward? And so, some people will call it like the dumb pipes of banking, but I think that, there's a lot more to banking than just the pipes, right? And thinking about all the layers of complexity that you have to deal with when you're connecting into a bank, that doesn't go away. In the US, there's 7,000 banks, and the regulators want to regulate banks. They don't want to regulate startups. And so in other markets, like in the UK, there's a lot fewer banks, and there's appetite to look at a broader population. And so when you've got that model where you've got 7,000 banks and a regulating entity, it's forced on the banks to make sure that there's good actors connecting into the systems. And so when you think about the access that a startup can have in a market like the US, it does have to have a lot more than just access to pipes. There's just a bunch of infrastructure that needs to go around it to make sure that models are scalable, sustainable, and compliant. And so, yeah, that's how we think about it.
So Currencycloud provides cross-border payment infrastructure. We don't sell directly to consumers or end users. And not all, but we have a very large number of customers who are challenger banks or prepaid cards and debit cards. I think most people, and a lot of people in Europe know Revolut, and they publish that they're adding somewhere between 10 and 15,000 new customers a day. They have 1.5 million customers. They are a neobank that's growing like crazy. So on the one hand, the kinds of services that we're providing to startups, and not only Revolut, I saw Lydia and Airwallex, who are a customer of ours out there, and a variety of other companies. We are effectively providing banking-style security, banking-style money transfer, and firms really can go with that. In terms of cooperating with larger institutions, there's a couple of different models. One, there's effectively what we used to call sales. In other words, you use the bank to distribute your product. It's very simple. You do the deal, the bank sells your product, and you keep an integrity to what you do, and they distribute it out. There's another, which you call basically partnership. I found in my experiences, banks aren't really good at partnership, that they'd much rather sort of buy you. In a bank, the idea to work with somebody who you can't control is often not very, very easy. It's just easier for them to try and acquire. So I think you can try to see distribution partnerships, which you're seeing, but then you might see banks trying to, especially if they have a platform way of looking at the world. I mean, BBVA has been very successful at doing this in terms of bringing other, becoming a platform. Crédit Agricole has the same thing. So there's a series of banks that have tried to be integration platforms to allow distribution for other products. I think that's one model. A second model is the banks just buy in the technology. It may wither on the vine, the people may all go away, they'll learn a little bit, make a little incremental progress, because that's about all they can do, but it'll move by inches. And then there's another model which is totally independent. I mean, I think if we look at Revolut adding so many different customers, and then cooperating, with us, with people in lending, with other banks, and them becoming an alternative platform. We shouldn't assume that the platforms of the future are only the existing banks that we have today. I think you have to have massive scale, and by definition, a fintech company that started small doesn't start with that scale, and you have to get to your $1 billion valuation and billions of dollars of money transferred very quickly so that you can afford the regulatory and all of that kind of infrastructure. But I think you're starting to see it. You're starting to see the first fintech unicorns emerge from the first and second wave of fintech companies, and those people are going to be the titans, I think, to use her word, of the future. I mean, listen, the financial services is a massive business, and it's not a winner-take-all market. There's going to be lots of winners, not just one.
And you mentioned there that often when banks acquire startups, they can wither on the vine because the people leave. Obviously, people are so important for making these businesses a success, and the more money we see flowing into the sector, pay deals are going up. Are we starting to see a war for talent between the banks and the fintechs? And if so, how do we address that? Do we need to have more training? I know you had some thoughts on this, Claire.
Yeah, I think we definitely see in the UK a shortage of skills when it comes to the technology sector and to the fintech sector. And I think now, Mike was mentioning it, we have seen the rise of a couple of marketplace, like strong player in the industry that are billion revenue business and that start entering and offering attractive packages as well to an executive suite. So you start seeing some of the transfer that go one side or one other. But to contradict maybe a bit myself from the beginning, I think the key differentiator remain the ways of working and the culture. So, I think at the art, like working in a startup is very different than working in a very large environment. And I think, from a lifestyle choice, it's also a bit, that's where it comes. Slightly differently, as well as the risks that you take when it comes to that. So it's interesting because if you think in terms of opportunities for all this talent, it's on the interest of everybody to create the talent and to create the marketplace. So it's on the interest of the banks, it's in the interest of startups to make sure, the ecosystem is vibrant as much as we can, because at the end, we all need more of it. I think, the way forward for banks, for me, is always around the retraining of your current staff rather than the acquisition. I think we've seen the counterpart of MyPenty. We also seen some fintech executive, becoming entrepreneur in residence in banks, or even taking, senior positions. And some have succeeded, some have found it more difficult as an environment to operate because you need more influencing skills, stakeholder management. More of the time is spent in a big organization in order to, arrive to a strategic decision.
And Mike, can you share your perspective on how you see the talent question?
So anybody who has ever walked into a good-sized commercial bank, pressed, say, the 8th floor button on the elevator, gone to the 8th floor, got off and looked around, knows that's not where they want to work.
What's on the 8th floor?
Maybe the 4th floor. Yeah. Or maybe it was like, being John Malkovich with all sort of like that. But So from a cultural perspective, but I think one of the fintech issues is as you become bigger, as you become hundreds of employees, and we're now almost 200 employees, if you don't maintain that same kind of sort of innovative startup culture that goes with being small, then in a sense, what's the difference between working here and working there? Also, you've got players like Amazon and Google and other people who are flirting around the edges of financial services, who both offer that kind of a bridge between not exactly a banking culture, but more of a tech culture at scale. So I think for the employees who come and work with us, and now we're a couple hundred people, we're not 20 people in a garage or anything like that. They are people who don't want to work in an environment, the bank sort of more solid, stable environment. So even on the innovation floor of a large bank, you just go up and you go, you know what, this isn't what I was thinking of. And so there's this huge cultural difference inside. We can normalize the benefits, and startups have to pay the kind of money to attract people with some other things, and banks can provide some innovative remuneration and compensation, but it's not about remuneration and compensation. It's more about the kind of attitude inside the company. But again, as you become bigger, you got to be careful about it in your small startup.
Yeah, I mean, I think that it's like, I think it's less about the size of the bank or the size of the startup. It's more about having ownership and the ability to affect change. And, I work at a bank. I work at probably a smaller bank right now, but I have worked at really large banks. I've worked at startups, and it's about the kind of work that you get to do. And, I'm sure Lloyds is a very large bank, and what keeps you there, what keeps me doing what I'm doing, is that I can see an influence in my work. Like my work is making a difference, and so going to a startup, I go back and forth between startups and banks to keep the skill set sort of fresh and be able to be nimble in both. And it comes down to having the ability to make a difference, right? And those are the kinds of people that can thrive in both environments.
And do you think that's going to become more common than people going back and forth between banks, startups, banks?
Well, I mean, it goes back to sort of the beginning of where we started. Like, is there going to be consolidation? How do we need to work together? And I think having some fluency to be able to do that makes the startup more valuable, makes the bank more valuable, and to sort of like create this ecosystem and keep the ecosystem going.
And on that sort of point, obviously there is risk as well in partnering with the wrong person. How do you go about deciding which startups to work with, and vice versa? If you're a startup, how can you assess whether the bank is the right fit for you?
I mean, that's a really good question, and I think it's a very it's situation by situation, and it depends a little bit on how and what you're partnering on, right? If you're talking about something that's sort of core to your system, and a startup doesn't think regulation is important, like it's probably not going to be a good match. So having a cultural match as well as sort of a way of working together is really important. Finding areas where you can do proof of concepts and sort of like test each other out is also really important. And making sure you're sort of getting the best out of each other, right? You're working with a startup for a particular reason. You don't want to just say like, be like me, right? That doesn't help anybody.
As a startup company, one of the really important things in building value is to own your tech stack. You're going to build value, you're going to own your tech stack. So you can do distribution deals, and it's the same with the bank. If you can do distribution deals with the bank where they help to distribute your product, but if you give up what your core is, then you've lost the core of your business. And so there's all sorts of levels of partnership. But the bank takes a year and a half to decide anything. Or if they can decide it overnight, then they can't implement it in a year and a half. I mean, it's don't bet your company on it.
Yeah.
I'm on the board of a little company, and our major customer is Bank of America, and it's taken a year and a half to get the deal closed. All right, and they were working really fast. When we got through procurement, and then we got through 25 different layers. So it's not.
It's your advice.
Well, again, that is using a bank is just. It would have been easier to sell them the company, but so that kind of sales or distribution cooperation is very purposefully slow. because of the layers of compliance and administration, which are purposeful. I'm not saying those shouldn't be there. I think those protect the institution in a way that we want it protected, but don't look to it to be your savior.
And sorry, Claire.
No, I'm laughing because I remember, I set up and led our innovation department for 4 years, and I remember one of the first experiments we were doing was, and I remember it was like now 5 or 6 years ago, but it was a voice navigation on the mobile, and so it took some time, and like I remember my boss saying like, "Why are we not getting quicker?" And I was like, "Let it go, let it go." And the cost of the proof of concept was like 25K, and it took like 8 weeks to go through the process in the bank in order to just get the paper signed, so we didn't even start the prototype. And I said, like, now, what we can do is we can go to see our legal and sourcing department, and we can ask them why it took 8 weeks to sign a 25K contract. And I think it was a really good way for the organization to learn, because, it was the first one, and really from there, we onboarded them on day one to set up our corporate accelerator. And then, over the 4 years, we learned about doing it very well, and in 2 weeks, we could onboard a startup, sign the contract, do the proof of concept on the back of it. Now, I'm not saying it's easy, so, when you were going to scale to production, it was another story, and there was some other complication on the back of it. But, like, I think the key point for me that I always stick on my mind was, for him, it was about, twisting the arm of people and rushing it through the process. And for me, that was about getting the people into learning and hearing them from why you cannot make it quicker. What is not enabling you to make this the speed, the decision, and the agility. And I think that's one of the principles that come more and more preeminent in our ways of working of today.
And just finally, we're running out of time, unfortunately, but I'm sure there's plenty of startups in the audience who may want to work with banks or partner with them. So quickly, if you could each give us your top tip for striking deals with big banks.
Yeah, I think the first one will be don't offer just a coffee, get referred. It's much more effective, in general. Like, we receive a lot of email. The second one is, if you get in front of somebody, get a demo in the first 5 minutes. And the last one will be, ask about the organization, ask who is the decision maker, who is going to make it fly, because you don't want to waste your time talking to a bunch of people, in the organization.
The first bit of advice is have patience.
You're going to be there for a year and a half.
Because even if what you're doing is economically, personally, generationally compelling, it's still going to move really slowly. And then the second thing is be very confident of your value proposition. Sometimes with startup companies, you see people who have a great solution to a problem, but they're not clear whether they're selling it to the bank, whether they're selling it to a business, where they're selling it to the end user. In other words, just because you understand the problem, it doesn't mean you know who the customer is. So a very clear definition of who the customer is, and then that helps you deal with the bank. Because if the bank is buying it for their customers, it's a very different discussion than if the bank is buying it for themselves.
Reetika?
Yeah, I think my biggest piece of advice is know who you're talking to. So a quick anecdote, because I know we're running out of time, but I had a company that called me 3 times, found out who my admin was, called our headquarters, and then called my boss, and all within 2 days. And I finally had a chance to call them back, and then they realized that we're not a consumer bank. And I was like, you just stalked me for 3 days and have nothing to sell me, right? And so, know who you're selling to.
Yeah. Fantastic. Well, we're out of time, but I hope you all join me in thanking the panel, and thanks very much.